Hey everybody, welcome to Mortgage Today for Friday, July 14th, 2023, and oh, what a day it was. Proving that you can't win them all, MBS were down 30 basis points bright and early this morning. Stocks were up 12 points. UMBS 5.5 were just down nearly 3/8 of a point. A split second later, they're only down a hair over an eighth, and then it bopped right back up to that 30 basis point loss. The discrepancy is due to the illiquidity and the sort of bid price volatility occasionally seen due to anything goes mentality of some traders entering bids on an over-the-counter trading environment. It's also due to consumer sentiment coming in at 77.5 on a 70.4 forecast. It was 69 last time, so that's a pretty big pickup. Inflation expectations came in at 3.4 versus 3.3 on the 1-year forecast and 3.1 on the 5-year, which was pretty much on forecast. If you want to know where rates are going in the next couple of months, you just have to look at what markets are pricing in for the future of Fed funds policy hikes through the end of the year. Right now, Fed members continue to beat the drum that rates need to be higher. However, markets, traders, and economists think the Fed is wrong and will not be able to raise a final hike after this final hike in July. Bonds sold off on Friday, with the easiest scapegoat being the extra strong consumer sentiment number coming in way over estimation. 10-year yields remain below yesterday's highs, and although MBS were lower than yesterday's, they'd outperformed treasuries earlier in the week. In short, most of the week's gains remain intact. In fact, considering it was a summertime Friday with strong data after 4 straight days of gains that took bonds into overbought territory in the short term, one might consider this bump not that bad. To close the week, we are down 36 basis points on the day. Stocks lost 5 points net at 99.67. We are in that very, very familiar range that goes all the way back to May. Right here, bordered by several different trend patterns on the top at 99.234 on the bottom. In terms of sheer size, the Fed's holdings deserve attention at the very least. The central bank is currently holding $2.55 trillion worth of agency mortgage bonds sitting in its vaults, which at the moment accounts for 29.4% of the $8.7 trillion outstanding. So the federal government is actually holding about 30% of all mortgage-backed securities hanging out there. One institution all holding almost 1/3 of the market rules that market. Even if it didn't, as this is one does, you have the ability to send rates higher, lower at its pleasure. On the bright side, its total holdings are down 6.7% from the record of $2.73 trillion they reached in April of 2022. Those numbers are almost unimaginable. Looking at next week in the economic calendar, on Monday we get a little bit of data. The big ones are on Tuesday. We'll get retail sales, which will give a glimpse into inflation. On Wednesday we have a 20-year treasury bond auction, and on Thursday we get jobless claims, which jobs are really kind of the front edge mover of the market right now. We get the Philly Fed, and then a 10-year note auction. Over the weekend, check out some things you actually have control over, including the articles from our sponsor at thatmakesense.com. Definitely some stuff in there to get your mind right, to go out and sell more and make more money.